Hey everybody, it's Eric Green. Welcome back to Tax Rep Network. As it is, I'm actually in lovely Appleton, Wisconsin. I'm going to be doing a live full-day program on Wednesday of this week, which will be May 2nd for the National Association of Tax Professionals on tax resolution. But what I wanted to do is do a podcast on something that comes up frequently, which is penalty abatement. You know, everyone sees those late night commercials. You know, we can get rid of penalties. What's the truth to that? How easy or difficult is it really to get rid of penalties, tax penalties? Well, the truth of the matter is we can do this. There's really three ways you go about doing it. Some can be very easy, but it really depends on the client. And other times, the government just doesn't give this up. They make it sound very easy on TV. You know, you call up, they'll get rid of the penalties. That's not the way the government views this. All right. So what I want to do is just, bring you up to speed on that. Again, if you're new to the podcast, I'm Eric Green from Green and Sklar's LLC in Connecticut and New York. We do this podcast. I try to do it weekly, not always, of course, but I'm also the guy who wrote the accountant's guides to collection and to resolving tax debts. What else do you need to know about me? I've served as adjunct faculty at University of Connecticut School of Law. I'm a past chair of the Connecticut Tax Bar. I'm a fellow of the American College of Tax Counsel, and I'm the founder of TAXREPLLC, which is a membership group where we help accountants and lawyers build their resolution practices. So anyway, and by the way, I just want to let everyone know, May 17th is the full-day criminal tax program we're doing again at Quinnipiac Law School. You can either come in person if you're near Connecticut or join us via the web. Okay, and I'll give you the link toward the end of the program. The early bird pricing is still good for about another week. We have the special agent in charge out of New York joining us, the special agent in charge for IRS criminal in Boston joining us, the former head of Department of Justice Tax Division joining us. It's going to be a great day, and I think it's going to be a fun day and a good way to get 8 CPE credits. So let's get into the tax penalty aspect, all right? From taxpayers' perspective, sort of the penalty, they always seem to feel that this should just go away. Once we fix it, they should just take this off. That's not really the way the IRS views this, all right? The IRS views the penalties are there for a reason, right? There's a reason they're charging the penalties, all right? And if you were to look in the Internal Revenue Manual, they list out a number of reasons, all right? One is that they encourage compliance. If there's no penalty, why file on time? Why pay on time, right? Yeah, I'll do it when I get around to it. Even with the penalties, I have a lot of clients that feel that way, right? The penalty encourages people to come in, all right? The rest of America is filing up by April 15th or October if on extension. Why should you be an exception? If you're going to be an exception and not follow the rules, that's fine. Pay the penalty, right? Right? As I mentioned, it encourages compliance, but also acts as a deterrent for those who don't comply. And it helps compensate the government for having to deal with these people, right? If we have to have a revenue officer chase these people, if we have to file liens and levies and do all this stuff to get them to comply, who should pay for that? Shouldn't they? I mean, there's a cost associated with the non-compliance. Let the people who are non-compliant pay for that, right? It makes perfect sense. The Internal Revenue Manual, IRM, used to have another reason. They've since taken this out, but I used to think this was very funny. They used to list in there that the penalties were an educational opportunity and went on to explain that this was an opportunity for IRS personnel, usually collection people, to help explain the tax compliance requirements to the delinquent taxpayer. Now, I will tell you, if you don't file and pay, you're looking at 25% failure to file penalty, 25% failure to pay penalty, the interest on top of it. Most of my clients never really viewed this as a learning opportunity, that this was not educational. They found this frightening, economically devastating, and extremely stressful and really tremendous punishment, because more often than not, people who don't file and pay do it because they can't afford to. So the penalty now gets piled on top. Now, with all that said, I'm going to talk about penalties in a minute. The failure to file penalty is sort of the stupid penalty, right? Failure to file, it's 5% a month, caps out at 25%. Okay, so let's say you go on extension and October comes and goes, all right? November, December, January, February. By March, you've already tacked on 25%. Now, the failure to pay penalty is also capped at 25%, but that runs at 0.5% a month. So that can go out 50 months at 0.5%. Now, just know that those two penalties will work hand in hand. If you have both, you don't file and you don't pay, you are capped at 5%. So what happens is the failure to file goes down to 4.5% a month, with the failure to pay at 0.5%. So you still get the 5% penalty per month, but just know that there'll be an extra 2.5% that's going to fall over into a 6th month for the failure to file, because you're only going to get 4.5 for the first 5 months. That extra 0.5% will all fall over into the 6th month. Accuracy penalty from an audit is 20% of the liability. And by the way, this is all on the liability. So let's say I fail to file and I fail to pay, and I owed the government, my liability for the year was $50,000 and I had paid in $40,000. The penalties will be on the $10,000 that I did not. All right? So it's on the liability. Now, if you don't owe money, then there's no penalty. And the one thing I would warn you about, and if anyone's listening to this, a taxpayer, remember you only have 3 years to claim a refund. I had somebody come to my office. It's in one of the books. I think it's in the Guide to Collection. She and her husband came in. The government came after them because they owed money, so they filed like 8 years of returns all at once. What they had done is they were overpaid every year. So why file? All right. Eventually, the most recent years, they owed money. So the first 5 years that they filed, the oldest 5 years, they had about $50,000 in refunds coming to them. They owed, and for the last 4 years, though, they ended up owing the government, okay, $30,000. So what happened is they filed all the returns and kept carrying the refunds over and basically said, you owe us 20 grand. The government said, no, you owe us 30. You've lost all those refunds because they're more than 3 years old. And they didn't believe them. They came in to see us. Unfortunately, we had to confirm that the government was right, and they were not happy. Okay, but technically, on those earlier years, there's no penalty. You don't owe anything. There's no penalty on it. So it's on the amount of the penalty. The accuracy penalty will be on the additional amounts assessed from an audit. Right? And there's also the civil fraud penalty, which is 75%, which is brutal. All right, if clients get hit with the civil fraud penalty, you have all the tax that they've assessed. Now you have 75% on top of it, and then you have the interest. Now, the federal rate of interest, it's called the AFR, the applicable federal rate. It's pretty low. I just looked. The May 2018 AFR, 3.23%. That's for the year, okay? So the federal rate is still pretty low. Compare that to some of the states, like where I live in lovely Connecticut, we charge 1% a month penalty. I'm sorry, excuse me, 1% a month interest, okay? So if you're in Connecticut, you have a business that fails, let's say you owe sales tax, right? We charge 1% a month interest. It's sales tax. You cannot go bankrupt on it. Can't go bankrupt on a collected trust fund tax, which a sales tax is. You've collected the money for the government. And in Connecticut, we have no statute of limitations. Remember, the IRS has 10 years of collected tax. Connecticut, there's no statute. It goes forever. So if you have a failed business and you owe sales tax, it may have been 30 grand when the business failed 5 years ago. It's going to be 100,000 now, and it'll be $1 million eventually. We have had some taxpayers literally throw up their hands and just simply leave the state. And that's how bad it is. All right. The federal government, though, not that bad. The applicable federal rates continue to be fairly low. Right. So what do we do about this? All right. We started off talking about penalty abatement or penalty relief. The term is abatement, but that's what we're asking for. How do we get relief from the penalties? Well, there are really three ways that you do this. If you're under an IRS exam, you can do this at appeals. And I have taken appeals just over the penalties. Now, what happens is when we go up there, it's usually not about the penalties. There are also a whole host of issues. All right. But we're going to definitely address the penalties. Now, you can seek first-time penalty relief, first-time penalty abatement. In order to do that, the client has got to have a good record for the 3 years prior, right? And then you can always argue reasonable cause. So as I mentioned, we can always do this up at appeals. The audit comes through, and there are adjustments, and then they hit us for the accuracy penalty. Here's what you do. Let's say they come in after my client, and it really is, it's a hobby loss issue, which is Code Section 183, right? They come in and they determine, my client wasn't really pursuing it as a business. It's a hobby. They suspend the losses and they hit us for the penalty. But my client actually spent this money. He actually had the expenses. He just didn't realize that he couldn't take them without the income because of the 183 application of the hobby loss rules. I'll file the appeal. I know I'm going to lose on the 183 issue. I'll tell the client, we're going to lose. But when I get to appeals, I argue it. The appeals officer, and let's see what we can do. The appeals officer, let's say, very good. He said, Eric, I'm not buying this. It's a hobby loss issue, whatever. I'll come back and say, look, I spoke to my client. It's hyper technical. He actually spent this. I think we'll concede this. He'll have to suspend the losses. The penalty really isn't appropriate here. This is a hyper technical area. Accountants don't really even understand. Lawyers don't completely understand. He legitimately spent this. I find more often than not that the appeals officer, to get it settled, okay, Eric, I can buy that, and they'll put it through without the accuracy penalty. So you can do sort of that horse trading at appeals. You can't do it at the audit level. The auditors don't do that, all right? You got to get to appeals to do it. But you don't just go up there on the penalty. You go up there and I raise a whole bunch of stuff, knowing I'm going to concede those in order to get my penalty abated. But that's sort of the strategy there. So assuming that I've got the facts to do that. Now, if they got I've had clients, they've gotten dead to right, and it's basically fraud, and they only hit them for the accuracy penalty, I'm not going to be challenging that. All right, we're just going to call it a day. But, just be aware that when you do this, if you do this, you have a client, and it is a hyper-technical issue. I've had this with real estate professionals. People think they're a real estate professional when they're really not. And I do more than 750 hours, but they can't even quantify it. I'll go up and still argue about the other income and expense items, knowing we're going to lose that because of them being suspended, like the hobby loss one. However, maybe I can get those penalties removed in an effort to settle it. Now, as I mentioned, first-time penalty abatement this is something voluntary that the IRS does. Your client has to have been has a record of compliance, meaning no penalties for the 3 years prior to the year in question. So let's say it's the 17 return is filed and they get hit with a penalty. We can request first-time penalty abatement. Couple things you need to know about that. Number one, they have to be good for the 3 years. So you ask the client, well, the 3 years prior, I've never had a problem. Never had a problem doesn't mean never had a penalty. All right? You need or you want to verify this by pulling account transcripts. I have clients that tell me, I've never been penalized, and we pull the transcript report through, tax help software, and every single year they get penalized. They just happen to pay it. Well, you don't qualify. You need to have 3 years without a penalty prior to this. If you do, you can just pick up the phone and call the IRS, ask for first-time penalty relief. You can file a Form 843. That's the request for a refund or abatement. And by the way, if you have multiple years, you do an 843 for each year. First time, you only get the first time. You only get one. But if you're doing reasonable cause, you still use the Form 843, but you do one for each year. Now, the other thing I want to warn you about, when you call, they will abate the penalty as of that date. If your client has not paid it, the failure to pay penalty, that continues to run. So they'll abate up until that point, but future penalties will keep running. So you really want to try to do this when the client has paid it. All right, that way you get all the penalty. You know, and the big one is reasonable cause. This is where we go to the government and say, look, we have reasonable cause. All right, what you need to show here is that the taxpayer attempted to comply and was unable to for reasons beyond their control. Right? They showed due diligence and proper business prudence, and were still unable to do it. What I've said when we do the big penalty programs, in fact, I'm going to be doing a lunch and learn, I want to say in June, but I'll get something, I'll put something up in the next few weeks in the podcast to let everyone know when that will be. It'll be free. It'll free lunch and learn on penalty abatement. But when I do that talk, I generally point to a case where we had people come in, you know, and they hadn't filed many years of returns. Their daughter had brain cancer. It was terrible. So they get me the medical documentation. And what I begin to realize is they didn't file or pay for 03, 4, 5, 6, 7, and 8. The daughter, so from 03 to 08, the daughter's brain cancer was diagnosed in 05, and she went through treatment in 06. And it's terrible, and I would never wish that on any parent. But what about 03 and 4? The daughter didn't have brain cancer then. And what the IRS ultimately ruled was, and it went all the way up, I asked to speak to the manager, went up to the manager, and the manager called me, said, Eric, I'm not buying this, okay? Here's why. I understand the daughter's brain cancer. I'm glad she's doing well now, and that's a terrible ordeal. But what about 03 and 04? By the way, and this is why I like tax help software, because we can go back all those years before. He said they did this earlier in 97 to 2000. The other thing is they put their kids in college. They did the FAFSA form, you know, the financial forms. They paid their mortgage. They paid their credit cards. They've got great credit scores. They basically were willing to do and pay everybody else but the government. And they weren't buying it, and ultimately ruled against me. So what's good in penalty abatement is short and intense. Long and drawn out is bad. So compare that case, right, with the brain cancer for the 8 years. Another case, husband and wife have their second child. He is a self-employed financial advisor. She's a stay-at-home mom. She ends up getting postpartum and also becoming, she was bipolar but on medication, also becomes suicidal. He ends up basically having to stop his practice, take care of her, and take care of the 2 kids. So for 2 years, they don't file and pay. He ultimately files the returns, gets it basically paid except for the penalties, and we request penalty abatement. It gets denied. You always go to appeals on these things. We request the appeal. We go up on appeals, and the settlement officer, Mike, got on the phone. It was one of the fastest appeals hearings I've ever had. Said, Eric, I read through this. I'm abating the penalties. This is a no-brainer. This poor guy had his family, his life fell apart. He was always good up until then, and he's been good the last year since. He said, of course, I'm going to abate that. Short and intense with like a medical problem or some sort of a disaster that's easy to explain, the government will get on board with that. This long and drawn out, when it begins to look like is this is a pattern. It's a pattern. It's a way of being. And that way of being of not paying the government does not go over well with the government. Okay. Now, there is a case out of Florida called Custom Stair and Trim. I just want to bring to your attention if you have one of these. This was payroll taxes. Custom Stair and Trim got hammered in '04 by Hurricane Ivan, which is one of the top 10 biggest hurricanes up until that point we'd ever had. Damage to the business, damage to a lot of its clients, a lot of its vendors. They really just can't keep up with the payroll. So they're filing and they constantly have balances and they're throwing in payments, but the penalties, it's like cascading. The penalties keep coming. They start laying off employees, they're cutting their draw, they cut out benefits, and still can't. By '08, they still have more penalties. They seek penalty relief. The IRS denies it. They go into collection. They through collection in the tax court, they raise the issue that they have reasonable cause and the penalty shouldn't have been applied. The tax court agreed with them. And what the tax court said is where you have a business, they had Ivan in '04, and yes, now we're in '08, but that triggered this. And we have a business that has done everything that it should have done. It got everything filed. It was making payments, but couldn't keep up with the penalties. It let employees go. The owners cut their draw. They cut out their benefits. They did all of the things that we look for. And what do they look for? There are 4 factors that the tax court mentioned. All right, the taxpayers favoring other creditors over the government. Okay, meaning everybody else gets paid but the IRS. That's bad. A history of failing to make deposits. Well, prior to '04, the business was good. Tax court said, Custom Stair up until '04 was a perfectly compliant taxpayer. And we can point to Ivan as the cause, and the '08 recession didn't help. Okay? The taxpayer's financial decisions. You had a company where the owners cut their pay. They laid off employees. They cut the benefits out. They were clearly trying to get their expenses under control so they could catch up. Right? And fourth, of course, is the taxpayer's willingness to decrease expenses and personnel, which they did. Because of that, the tax court ruled in their favor. Cash flow is normally not an excuse because you should pay the taxes at the time you receive the money. Quarterly estimated for self-employed people, payroll taxes, when you pay your payroll, that's when you pay the taxes. But there are reasonable cause situations, and the IRS will look at that. Here, the tax court agreed with them. So what you want to do is look at these. If you have a taxpayer who starts to get into trouble, you need to look at the factors, say, what is it that you're doing? If they're paying everybody else, including their credit cards, but not their taxes, that is not going to go over well. If they're throwing money at the taxes and they're running up other debt along with the taxes, that's a better argument. They just can't cover everything. All right, but they're not favoring other people to the detriment of the government. All right, everyone. So hopefully this has helped. Like I said, we're going to be doing a full program on this, but I just wanted to address this because I get penalty relief emails and phone calls constantly. Tax rep members, non-tax rep members, podcast listeners. Somebody had asked me to do this. So when you're looking at penalty relief, if it's an audit, remember you may want to go to appeals, even if you would normally concede the underlying adjustments, if you think it's worthwhile and the client thinks it's worthwhile, in an attempt to get the penalty relief, even if you're going to concede the other issues. First-time penalty relief. The client will say, I've never been in trouble. Make sure you pull transcripts. Look back and see if they truly have not been penalized. It's not about having made the payment. It's about not being penalized. Okay? And if you're looking at reasonable cause, they have to have shown prudent behavior. You need to look at the other factors around it. And just so you know, short and intense is good. Long and drawn out generally is not good. Now, I can imagine a scenario where long and drawn out would work, but it'd have to be pretty extreme that it went on that long. All right. Couple things you need to know about. I told you about May 17th. We're doing a full day program on criminal tax. The link is there for you. All right. If you go out to just Google criminal tax 2018 and Green and Sklar's, the page will pop right up. And I hope you can all join us, again, either in person or live on the web. The early bird is through May 10th. then the price increases. But I can tell you right now, the room itself is almost sold out. The webinar right now is about half full. Quinnipiac system only allows a certain number of webcast attendees. So we actually are limited on that. You can go ahead and claim the discount if you're interested in any of the books. All right, use the Tax Rep Network 25, TRN25. That will get you a 25% discount on any of the books that you want, the Guide to Collection, the Guide to Resolution. All right, but remember, you get all of this for free if you join Tax Rep Network. Go out to TAXREPLLC.com or TAXREPNetwork.com, either one. If you become a member of TaxRep, not only do you get in on all the stuff we're doing, the training, the materials, a whole slew of library of training materials and videos, as well as the fact you can email us questions, have us look at stuff. You also get the criminal tax day for free. You get the books for free. So you may want to look at actually just joining and becoming a member. And remember, if you're watching this in YouTube, go out and check out the podcast. All right. And you can just download the podcast weekly. And otherwise, everyone, thank you for joining me. And maybe some of you are going to go and watch the NATP program. Again, it's Wednesday the 2nd. If you go out to the National Association of Tax Professionals, I'm sure you can get it there. And otherwise, thank you for joining us. Have a good evening.